Stock market update part 2. Let's have a look at what's worthy of putting in your pension, what isn't. Don't forget, if your pension's not performing well, go find out what the hell's in it. These are the S&P top 10 stocks over the past month. Doesn't mean you go and buy them. We're not chasing momentum. But let's have a look if any of them are worth getting into. Well, when the monthly and the weekly MACD, the moving average, which is a measure of the short, medium, and longer term average prices are all rising, there tends to be pretty strong momentum. But if the value growth income isn't there, it's not really one for me, because I don't tend to trade momentum, invest in momentum. Might trade it, but I won't invest in it, and trading's higher risk. Most of you won't want to trade. Calanova, what happened? Takeover bid or something? Those in the, looks a bit overbought. Okay. DR Houghton, it's a 7. However, overbought, not for me. 7 on value growth income. These are going in the right direction. Doesn't look too bad. Does not look too bad. I wouldn't want to get in a falling market though. So maybe wait until my, what day is it? Until my Friday broadcast. Bit overbought, and it's not 7, 8 or 9, so not for me. Not 7, 8 or 9, and sort of chugging along, isn't it? Looks a bit risky given these massive falls. I don't know, is the dating industry suddenly about to have a revival? Is there a risk you want to take? It's only 35 on the price. Now, remember, with US stocks, anything below 100 tends to be pretty much more volatile than things, as a general rule, than things above $100. And that's not the case in the UK, but in the US. Do you want to take that risk in a falling market with a bit of a downward trend here? Not one for me, might be for you. Again, looking okay, both the weekly and the monthly, but it doesn't have a 7, 8 or 9, so more risk than I'd want to take. Overbought, not for me. Okay, right direction, but massive falls. You might say it's about to bounce up. I'd say it's below 50. That's more risk than I want to take. It's not 7, 8 or 9. Yes, those look okay, but I'd rather, personally anyway, wait for the MACD to cross the moving average. So too premature to be getting in now. It's an 8, so that's good, but that's overbought, so not for me. Thank you very much. There is a theory that if the MACD goes above its previous high, then you can get in, because it could be one of these big moves up. You'd need more kahunas than I've got, so it wouldn't be for me. Not 7, 8 or 9, and a bit overbought. More likely to be falling, although it's in an upward trend, so I suspect it'll probably just hit here and go sideways, and we'll keep an eye on it to see when and if to get back in. Apple, as you know, one of my sort of quality 5, where I tend to exit on a daddy bear. It's no secret. I don't think I'm letting you into it. It's not a daddy bear at the moment. It's not a daddy bear at the moment. Tend to exit on a daddy bear. Oh, but you get these massive falls. Well, I can trade those, and I'm not trading my investments, but if I've got trading, then I can trade, and I don't plan to. So yes, big falls, doesn't matter. I like big falls because it means that now I know for sure at some point when this hits an all-time high, and if I were to buy more today, which I'm not planning to, but they'll get a point where I buy more, then great. I've got a 25% gain guaranteed. Not bad, eh? Microsoft, not a daddy bear yet, as you can see. As I said on my quality 5, no big secret I exit on a daddy bear. It's not a daddy bear at the moment like that. And I have said for a long time, look, it looks like it did here. So you get drawdowns, then you get recoveries, then, oh, but Alpesh, it's definitely going to be, well, if you think that, you can by all means exit now if you wish. Meta, remember, I got out of in April only because I needed to rebalance, not because it was a daddy bear, because I needed to rebalance because I just had all those tech gains from January 2023, those massive gains. So I needed to rebalance. Okay. Bank of America, where are we? It's not one I own, as you know, but because I'm giving a stock market update, I'm going through these. And look, that wasn't supposed to happen. It's still a baby bear. That is a baby bear, even though the fall is so large. And look, it was supposed to do this, hasn't followed the script. Like I said, not one I own, thankfully, to see such big drops, but sometimes happens. Look at that, and then goes back up. If you don't like those drawdown depths and durations, then don't have stocks like it. Most of your time as an investor should be spent, in the words of Warren Buffett, saying no. Okay, that's the difference between successful and really successful people. Really successful people spend most of their time saying no. Okay, Netflix, I said to exit this ages ago because it's overbought and it's falling. So, you know, you can wait until it goes back down to these levels. Wait until it shows this pattern again, i.e. this part of the graph. There, it might be a couple of years. You'll have to keep an eye on it. And when it does that, then you can get back in. All right. Similarly with this, no, sorry, overbought. If you already own it, get out of it. Take your profits. You've had some big gains. We're at a period now where we're not finding lots and lots of cheap companies to get into. We're at a stage where we're just having to wait, take profits from what we've got, and just wait a bit and be more picky. What I might call one of my quality 5 plus. So again, a kind of company which perennially has big gains, few drawdowns, which recover relatively quickly. It's not as good as a Microsoft, but it's overbought, so it's certainly not one for me at the moment. Walt Disney, mama bear now, not converted into a daddy, so it can still be held. You can see where the support is. It's somewhere down there. CVS, 7. You'd really have to wait for that to turn up, but it is oversold and at some point might well turn up and do what it did at this period, or do what it did at that period. So let's see. Block, sideways, nothing particularly interesting. Seems to be going in the right direction, albeit slowly, trudging along, 7, 8 or 9, so that's all fine. Columbus McKinnon, 7. But both of those going in the wrong direction, but might be a wait job because it's not quite a daddy bear. Well, it's not overbought anyway, so you just use the normal exit conditions. Anyway, won't go through all of them. Please remember, campaign for $1 million to add an extra $1 million to people's portfolios over their lifetimes. And the way that'll happen is if we go back all the way to a sort of an ideal company. Where's it gone? Here it is. If you think of what the ideal investment you want looks like, okay, it looks like this. Very few drawdowns, shallow, short in duration, many years of gains, the ability to go into cash when you see a daddy bear, i.e. MACD for overbought, falling sharply. So not many opportunities to be wrong-footed. Great gains year after year. There are very few companies built like that. And this won't always be like this, and it wasn't in the past, and it has been for nearly a decade. But, you know, most companies go through cycles. That's how your pensions get boosted. In other words, they don't happen every year. There'll be periods where you're holding cash. There'll be periods when they go up. There'll be periods when for months you're going 0% return, 0% return, 0%. So you have to be patient and a bit dull. And you use a very simple rule. Exit when that happens, enter when this is oversold and rising. There are very few companies in the world you can use like that in your pension. And occasionally when they shoot up, that's when your pension takes a big leap up, and then for ages it goes like this. So usually it'll go like this, maybe this, stepped. It will not go up like this. It's not a bank account. Okay? From all those books that I've written over my shoulder, including Investing Unplugged, if you'd like to download a copy, it's on alpeshpatel.com/links, alpeshpatel.com/links. And it's that is one of my 18 books taken from my 200 columns in the Financial Times and my Bloomberg TV show. So the best knowledge from Nobel Prize winners as well included in there. Thank you very much.